In today's video, we're not learning another trick. We are going to dissect the mind of Steven Dux to see how he views the market and finds trading edges that 99% of others miss. Are you ready? Have you ever scrolled through trading videos and wondered, why do millionaire traders like Steven Dux seem to completely ignore the classic chart patterns we're all taught? They're not drawing head and shoulders. They're not obsessed with overbought or oversold RSI. So what are they looking at? Their secret isn't some holy grail indicator. It's a philosophy, a completely different mindset. And the core of Steven Dux's thinking, the man who turned tens of thousands into millions, comes down to two words: unchangeable factors. Why? Because according to Dux, when 90% of retail traders learn and apply the same thing, that thing becomes a weakness. Dux argues that smart money or whales know exactly what the 90% are looking at. They know where you'll place your stop loss when you see a head and shoulders pattern. And they can easily trigger all of those stops. Therefore, from Dux's perspective, trading based on these factors is like walking straight into a preset trap. He chooses a completely different path. And this is where Dux's thinking diverges. He focuses 100% on what he calls unchangeable factors. According to Dux, these are events that have already happened, that are written into the stock's history, and directly impact the laws of supply and demand. Their outcomes can hardly be manipulated. Dux doesn't try to guess the price. He reads the news and analyzes, okay, this company just released millions of new shares. The supply has suddenly spiked. Naturally, the price has to fall. This is economics, not just drawing lines on a chart. Conversely, with a reverse split, when the supply is squeezed, even a small amount of demand can create a massive move. These are the high probability edges that Dux is always looking for. Dux also pays extremely close attention to price history, not to find patterns, but to read the psychology of those who previously traded it. He asks the question, who got trapped and where? Using the 2017 Bitcoin example, he would analyze that a massive number of investors became bagholders in the $15,000 to $20,000 range. This pawn of being trapped is a historical fact, an unchangeable factor. When the price returns to that zone, their natural psychological response is to sell at break-even just to get rid of the burden. This creates a huge psychological resistance level. Dux would use this pawn to look for a selling opportunity, rather than blindly buying in. From this approach, we can clearly see Steven Dux's trading psychology. It's the patience of a researcher and the coldness of a hunter. He doesn't trade every day. He waits. He waits for an unchangeable factor to appear. So how can we, who learn from Dux, apply this mindset? Here is the three-step process distilled from his philosophy. Step 1. Form a hypothesis. Start with a question based on supply, demand or psychology. Step 2. Hunt for data. And this is the key point in every video, every lesson from Dux: data. He never believes in something until he has proven it with data himself. You have to do the work of a detective. Find all past instances of your hypothesis. Create a spreadsheet, log every parameter: date, price before, price after, volume. Dux emphasizes that you need at least 100 data points for a statistic to be meaningful. Step 3. Analyze and set your rules. Once you have the data, answer the questions. What is the win rate of this strategy? 60%, 70%, or 80%? When I win, what's my average gain? When I lose, what's my average loss? The risk-reward ratio. Are there any secondary conditions that increase the probability of winning? E.g., does it only work for stocks under $5? Dux only pulls the trigger if and only if the numbers show a clear statistical edge. He turns trading into a game of probabilities where he has the upper hand. Okay, let's summarize the core mindset of Steven Dux that we've analyzed. Ignore changeable factors, the patterns and indicators that the crowd uses. Hunt for unchangeable factors, the events, histories, and crowd psychologies that are set in stone and cannot be manipulated. Think like a scientist. Form a hypothesis, prove it with historical data, and only act when you have a statistical edge. This is the difference between a gambler who follows pictures on a screen and a professional who runs a business based on probabilities. This is how Steven Dux built his empire. Researching and backtesting data requires a lot of